Hello everyone, and welcome to this presentation of how to increase your trading odds in every market. Hello and welcome once again. My name is Primo. I am the president and founder of Specialist Trading, and for those of you who are new to my presentations, Specialist Trading is an educational company. What we try to do is educate you so that you can empower yourself and make all of your trading decisions by yourself, so you won't have to rely on an outside source such as a broker or relying too much on trading rooms and chat rooms. Now, once again, my name is Primo. I've been trading for 37 years. I started trading on the floor of the Pacific Stock Exchange. I was actually on the floor for 16 years, and 9 of those years I was a specialist for Donaldson, Lufkin, and Jenrette. If you're not familiar with what a specialist does, that's the person who makes markets in roughly about 40 to 50 different stocks. So if you wanted to buy a certain issue, you would go up to that person who specialized in that particular stock. Now, as I said, I was on the floor. I traded through the crash of 1987. I traded through a great bull market that followed after that. And in the mid-90s, I left the floor to manage money and to pursue my own trading as well. I've traded just about every market imaginable, from Forex, E-minis, stocks. I also have taught and lectured and educated many people for different websites. But around 5 or 6 years ago, I started Specialist Trading, where all I do is mentor and teach my members exactly what I use in my own personal trading. So everything I'm going to be sharing with you today are things that I actually use and teach my members. Now, before we begin, I have a lot of great free information to give you, but before we start, I please ask that you take a moment to view our disclaimer. We are required to show you this, so please take a moment to view it. I'm going to show you a lot of performance results using a couple of edges that you'll be able to start using as early as tomorrow, but please remember that we can in no way guarantee that any of the performance results I'm about to show you will be repeated in the future. So as you're taking a moment to view our disclaimer, I'd also like to mention that if you have any questions during the presentation, please write them down and try to remember them. We'll only answer questions at the very end of today's class. Okay, I know a lot of presenters like to answer while they're presenting, but in my experience, it seems to slow down the presentation, and I have a lot of great free information to give you, so I don't want to kind of bog down and slow down the process. We'll reserve roughly the last 15 minutes or so to ask any questions that you may have. The main question most people have is this presentation being recorded? Yes, it is. So if you have to leave early or something, you can see the number contacted there in your screen, your chat screen, I believe, and you can contact us and we'll send you the link for the recording. We'll also leave you with an email address as well as this phone number, where if you have any questions and you'd like to speak to us personally, you can do that as well. But please wait till the very end of today's class to ask any questions, okay? Now, I also like to mention that we are now on Twitter. We've just been doing it for a couple of months now, and we post a lot of great free information as well. In fact, today we made our Twitter followers known that we have been long the market in one of our strategies for trading the E-mini. So you can check that out and go to at SPCLSTTRADG. That's our handle for Twitter. We had to abbreviate that because Specialist Trading is a little long. But as we stated, come there and follow us, and you'll get a lot of free information. Okay. Okay, now as I stated at the very beginning of this presentation, this is an educational company. Even though we provide all of our members with strategies and techniques that I've accumulated in my 37 years, and we provide them with signal, we have a signal service when these strategies kick in and generate a signal, our real goal is to teach you how to trade so that you don't have to rely on anyone else. Contrary to what a lot of people believe, when I traded on the floor, my first year or two, I struggled tremendously. I know a lot of people think if you're trading on the floor, you must have a license to steal. But that wasn't true. I struggled just like many of you probably are struggling right now. In fact, I couldn't make a dime. I would be trading for a couple of months and have a great couple of months, and then I'd give everything back in the next trade. So it was very discouraging. And I really had a tough time in the beginning. So I know exactly what you're going through if many of you listening today are having the same exact experiences. Now, my mentors taught me that the specialist edge is really rooted in simplicity. So I'm going to share with you a couple of edges today that we use in virtually, I would say, about 3/4 of all of our strategies. And I'm going to give them to you today for free. But remember, everything is extremely simple. If you look at people who have been trading for just maybe 3 to 5 years, most of their trading strategies or plans are extremely complicated. They've got 20 or 30 rules and regulations. They've got all these indicators. They've got all this neural networks or a lot of things that rely on news or chat rooms. And then if you notice that people have been trading for 30, 40, 50 years, they have maybe 3 to 4 rules. Okay, they can write down on the back of a napkin the rules to their strategy. So that's what my mentors taught me, is that it's the easiest thing in the world to complicate your trading, but it's the most difficult thing in the world to simplify it. But once you simplify your trading, you'll get on to that road of consistency. And that's really what we teach. We teach how to get consistent in the market. We're not going to promise you that every trade is going to be a home run. We're not going to promise you that every trade makes thousands of %. I know like some educators do. But we're trying to really relay the things that have worked for me and that worked in my trading to help my trading so that you'll get consistent. So my goal is to teach you the same things that were taught to me. This is the specialist edge, which, as I stated, is rooted in simplicity. All right, so get out your pencils and papers. Remember, if you happen to have a question, some people may have just joined us right now, write it down and we'll answer every and all question at the end of the presentation, okay? We won't answer anything as we're speaking. So why don't we begin? Here's what you're going to learn today, all right? I'm going to start out by sharing with you 2 conventional methods, 2 typical types of strategies that I'd say the majority of people use. And I'm going to show you how they can work. They work okay until they stop working, all right? So they don't have that great of an edge. So how can we increase the odds for success with this particular method? Well, I'm going to share with you 2 rules of one of our most consistent strategies. That's strategy number 4. And these are 2 rules that make up the components of this strategy. Now, obviously, I can't give away all of the rules because it wouldn't be fair to the people that purchase the strategy, such I can't tell you where the exit points are and where the stop placement is. But I'll give you 2 of the basic rules that make up one of our most consistent and profitable strategies. That's strategy number 4. And then to even hike up the performance even more, we're going to add a short-term trend identifier. Okay, this is a proprietary tool that we have at Specialist Trading that we can increase our odds for success even more, and I'll show you how this increases our trading odds by combining these 2 rules that I'm going to be sharing with you, as well as combining that with the short-term trend identifier. So these are great ways in which to enhance your trading, regardless of what method you use. If you use one of my methods, or if you use one that you've purchased from another educator or something that you've come up with on your own, okay? All right, so let's talk about trading method number 1. Once again, these are methods that the majority of people have been taught, conventional trading methods that you should use, and one of them is double bottoms and double top and tops. Okay, this is a very, very sound way of trading. They're very easy to spot. It's basically a pattern recognition type of method. And what you're looking for, as we see here in this example here with Apple, when you see price coming down and make a bottom as we have here with 1 and then another as we have here with 2, that's telling you that some type of support, okay, some type of base is being formed. And so this is a good place to accumulate the stock because most of the time it will stop off of that double bottom and go back up, as you see in this case. Now that's a double bottom. The same thing works reverse if we're looking at a double top. Here we have a daily chart of the E-mini future. We see here that we've come up and hit a top at number 1, kind of consolidated, hit that same top area roughly at number 2, and conventional wisdom says that we should most likely stop and go lower, which is what happens. So this works great until it doesn't work. All right, here we have TGT. We've come down here, made a bottom at 0.1, kind of tried to rally again, made another bottom. So here's where you'd buy it, somewhere in this vicinity, and then look what happens. Okay? Once again, we're looking for edges here to heighten our performance, to give us a little bit more odds in our favor. Well, how about trading method number 2? If you don't trade that way, what about another very popular trading method? I know a lot of people who trade the Forex use this. These are Fibonacci retracements. Different levels, in other words, where you look for a pullback. And these can either be at 75%, 62%, 50%. You know, there's lots of different levels. Let's use the most basic, which is 50%. Okay, and in this example with UPS, we see that the stock was going higher, all right, and so you want to purchase it on a pullback to some Fibonacci level. So what you do is you kind of bracket where the low was, where that run started, to where the top of where that run was, and then we're going to wait for it to come back 50% or half of the distance, okay? So when the stock pulls back to half the distance of its last run, that's a good starting point to buy. And as we see here, look what happened. Went straight up, right? Okay, works really nice. Same thing works. It happens to the downside. The euro-yen is heading lower, so we bracket off where the top of that run was to the lower. And so we want to see it rise roughly about 50% of this distance here. And this is where we'll sell, okay? And works really nice, okay? As we stated, these things work very nice until they don't work. Here we have an example with Tiffany. Tiffany was coming lower. Okay, so what you want to do is, it's in a downtrend, you want to see it bounce to this 50% level, and that's where you want to sell it, roughly around this area, because it's most likely going to be headed lower. And then look what happens. So obviously what we need is some type of edge here to enhance our performance, to keep us out of this trouble, something that can kind of filter us out of these bad trades. Okay, this is what everyone's searching for, some type of filter, some type of edges so that we know we can be on the right side and we know we have an edge that the momentum is going to carry in the direction we want it to. Well, this brings us to probably our most popular strategies, traded in roughly over 60 countries around the world, traded by hedge fund managers and traded by people who have been trading for just a couple of weeks alike. This is strategy number 4. I personally trade this. This is the strategy I learned while I was on the floor. Extremely simple, but extremely powerful. And I'm going to just give you some of the highlights of this particular strategy. Even though it's traded, once again, I said, by hedge fund managers as well as people that have been trading for a couple of weeks, it's for all traders. In other words, we don't change the rules regardless of how long you've been trading, a couple of weeks or 20 years. It doesn't matter. You're trading the same rules. It's designed for traders looking to catch quick momentum moves. Even though in the course we tell you how to hold on to a trade longer if you like, it's really meant for those people who want to get in and out very quickly, anywhere from 1 to 5 bars, depending on what time frame. Now, its intensity level in our definition of that is a number 2. In other words, it's the most moderate. With intensity level number 1 being the most extreme, meaning where you have to watch every tick, you can't leave your monitor, you have to be watching everything at the moment, and level number 3 being the most relaxed, where you can just pretty much walk away. This is right in the middle. It's very moderate, intensity level number 2. It only uses one indicator. That's all we're looking at, one indicator on the screen. So that's how simple it is. This works in any time frame, any direction, and any market. So it doesn't matter if you're using this the way I use it on intraday charts for the E-mini, or whether you use it on monthly charts of the Forex markets or on daily bars for stocks. It works in any market, any direction, and any time frame. Okay? Remember, our edge is consistency. We're not going to sit here and tell you that every strategy number 4 trade is a winner. And that's not what we're about. I've been trading long enough to know that doesn't exist, and I'm not going to sit here and trade and tell you that over time you can be a millionaire trading strategy 4. What I will tell you is that it has tremendous consistency, and if you know how to trade it, if you really understand the process, you'll have this nice consistency to your trading. And that's really what success is. I know lots of traders who made millions of dollars on the floor in just a short time, and they gave it all back. Okay, so that's really not success, how much money you can make. Success is whether you can come back to play another day. Success is not wiping out your entire account and being able to come back and trade again. And the only way you can do that is by having a method that is 2 steps forward, 1 step back, that is consistent. And that's what strategy number 4 is, okay? All right, so let's talk about these 2 rules. Now, you may want to write them down, but once again, this is being recorded for those of you who may come in late. But these are 2 of the basic components that make up strategy number 4. I believe it has a total of 5 rules. I can't give away everything, but I'm giving you 2 of the most important that really increase its odds for success. And you can apply these to any strategy you have, whether it's one of yours or whether it's something that you purchased from another educator. But it doesn't matter. You can apply these 2 rules, and they will really, in my opinion, increase your odds for success with consistency. So if we're looking at buys, here's what we want. We want to make sure that price is above the 50-period simple moving average, okay? Because this tells us that the overall trend is up. We never want to short if price is above the 50-period simple moving average. Why? Because we're trying to get the odds in our favor, and if you're doing that, you're automatically going against the odds. Most stocks above their 50-period moving average will continue to move higher in some capacity. So why short them? Let's look to buy them. Let's look for some structure in order to buy them. So if price is above the 50, we're never going to look to short. We're only going to look to buy. And then secondly, the setup bar, in other words, where the bar prior to entry, must close in the top 25% of its range. Okay, this is an extremely important factor. When we say the top 25% of its range, all you have to do is take let's say we're looking at a daily bar. Okay, and if the daily bar high, let's say, is 104, and the daily bar low is 100. Okay, so we have a total range for that day of 4 points. All you want to do is make sure that we close in the top quarter of that of that particular bar, which would be anywhere from 103 to 104. Okay, do you see that? That's what it is. It's just you divide whatever the bar is. It could be maybe an E-mini bar, maybe 4 ticks. It could be a currency pair of 100 pips. It doesn't matter, but whatever the range of the bar from top to bottom, not from open to close. We don't care about whether the open was here or the close was here. We're not looking at that body such as a candlestick. We're looking at the high and the low of the day or of the intraday bar. And then you divide it by 4. You just want to make sure that you close in the top quarter of that bar. Okay. And why are we concerned with this? Because when any bar, regardless if it's a 5-minute bar, a monthly bar, or a daily bar, closes in the top 25% of its range, it means that the market, the most important thing you should be concerned with, not an outside source like a trading room or a chat room, but the market is telling you, most likely, it's giving you a clue that it's going to go higher. It's going to continue in that direction. So along with it being above the 50-period moving average, we have a great edge. We have 2 great odds here for success by using these 2 tools. All right, so here's what we want to see. In this example, where is price in relation to the 50-period simple moving average? Obviously, price is above. All right, so the overall trend is up. Okay, so that's the first rule. Second rule is we want to look for bars that close in the top 25% of the range. Okay, and that's these 2 bars. And look what happens. All right, immediately after those bars are closing in the top 25% of the range, look where the momentum continued in the same upward direction. Do you think these 2 simple edges could increase your odds for success? Remember, these are 2 of the components of strategy number 4, but you could easily apply them to anything you're using right now, and I believe they would increase your odds for consistency. All right, let's look at if you want to go short. Well, we just take the same exact rules, but we turn them upside down. So now, if we're looking to go short anything, price cannot be above the 50-period moving average. It must be below the 50-period. Why? Because this means the overall trend is down, and we never want to go long or try to pick a bottom when the overall trend is down. So if you see anything, regardless if it's a 5-minute chart or a monthly chart, and it's below the 50-period, you don't want to buy it. Only look for sell setups. And so what's one of the setups you can look for? Well, you want to see a price bar close in the bottom 25% of its range. Once again, you simply take the high of a bar and the low of the bar, divide it by 4, and if it closes in the bottom quarter, the market is giving you a tremendous clue as to which direction it wants to go. And most likely, the odds are in your favor, it's going lower. So if we look at this example right here, we ask ourselves, where is price in relation to the 50-period simple moving average? And we see that price is below. So that means that the overall trend is down. Okay. Next, we want to look for a bar that closes in the bottom 25% of its range right here. Okay, so this is our clue that we're going lower. You see how simple that is, okay? I'm not going to say that it works every time, but we've just put the odds in our favor. So let's show you some strategy number 4 examples that use these 2 edges. Remember, these make up 2 of the 5 components of the rules of strategy number 4. But you can apply them to anything. You can have some strategy that goes off news. As long as you add these 2, you're going to increase your odds for success. Here's some current strategy number 4 signals that were generated and most of our members were able to trade. Here's SWN. Where is price in relation to the 50-period? Price is above. So this means we're only going to be looking to go long. And we have a strategy number 4 signal that was generated right here. Okay, we close in the top 25%. As you can see, here's the top of the range. Here's the bottom of the range. You simply divide it by 4, and we closed in the top quarter. Now, if you're a member of Specialist Trading, you would have seen this, and also with our membership, you get free add-ons that automatically generate the up and buy signal arrows. Now, this was generated on the 13th, and look what happened. In the next 3 days, you went up about 2 or 3 points. Here we have TGT, which was at the beginning of this year. Price, the majority price was below the 50-period simple moving average right here, and we closed below. All right. Now the software automatically generated 2 sell signals on the 2nd and on the 3rd to go short. And they both closed in the bottom 25%, and look what happened with TGT. Now remember, this strategy is designed for quick momentum moves, but we teach you in the course how to stay in longer and catch these large moves if you'd like. Here's an example in the E-mini. This was just on the 14th. This was just a couple of weeks ago. We're above on a 5-minute chart, the 50 period, so this means we're only looking to go long. We would in no way consider shorting the E-mini because it's above the 50. And here, the add-on generated a buy signal on this 5-minute chart, roughly about 9:45 Pacific time, and look what happened. Had a really nice upward move. And if we want to go to tick bars, the same thing can happen. These were all generated sell signals using strategy number 4, using the add-on. As you can see, the majority of price is below the 50-period simple moving average. And these were all sell signals you could have taken advantage of on the 19th, which just was roughly a week ago. And if you can also want to trade the E-mini on a daily bar basis, well, here was a sell signal using the overnight session on the 24th. It picked up a quick 50 points to the downside in the next 2 weeks with a strategy number 4 sell. You see how we closed in the bottom 25. Now here was a little bit difficult signal because the majority of bars were above, but once again, the rules for strategy 4 create a little different scenarios, and this was perfectly valid without giving the rules away. As long as we closed below, and as long as we were closing in the bottom 25%, this is a valid signal. Now, if you trade the currency pairs, here's the euro dollar. These are all buy signals generated using strategy number 4. And if you wanted to go short, these were all sell signals, all actual sell signals that our members of the Forex strategy number 4 course took going short the Australian dollar. All right, now I promised you that not everything works all the time, and I'm not going to sit here and tell you that strategy number 4 works all the time. In fact, here's a great example here in SNDK. We see that price is above the 50-period simple moving average. The software generated a buy signal here to go long on this bar that closed in the top 25% of its range. So you could have easily purchased it, and then look what happened. You would have had a loss on your hands, and you would have said, boy, this doesn't work. I thought Steve said this works great. And then later on, another signal was generated, even though we were below. Once again, if we close in the top 25% and we are above the 50-period simple moving average, it's still a valid signal according to the rules of strategy number 4. But at this point, you're probably a little gun shy. You took a nice loss here. You wouldn't have taken this trade, and then look what happens. So just like the methods I showed you, some work and some don't. So same thing with strategy number 4. How can we increase our odds for success even more? Now, strategy number 4 gave us 2 great edges with looking where the bar closed in relation to the 50-period simple moving average, and also where it closed in the top 25 or bottom 25% of its range. So those are 2 great edges. But how can we increase our odds even more with this strategy and with any strategy? We simply add the Peti, and that's the Primo Early Trend Detector. Okay, that's abbreviation for the Peti. So what exactly is it? It is a proprietary color bar algorithm. And I've been using this since the floor, but since the floor I've had to come up with a calculation by hand. It's extremely simple, but I can only use it on daily bars because I couldn't use it intraday because it's too difficult. But we've turned this into a color bar algorithm, so now you can use this and all of your bars will be either colored green or red in some capacity. When you see a series of green bars, now they're all not going to be green like this, but if you see the majority of green bars, this is telling you that the short-term market is in an uptrend. You have a short-term uptrend in place. Now conversely, if you see a series of red bars, majority of red bars, well then you have a short-term downtrend in place. That's how simple it is. So how can we apply this to the first 2 trading methods we talked about, double bottoms and double tops, and Fibonacci retracements? How would applying this help in those signals that we showed? Well, here's what you want to do. For buys, you only want to trade buy signals that are colored green. And conversely, for sells, you only want to trade sell signals that are colored red. It's that simple. Let's show you what we mean here. We look at Apple. Excuse me. Once again, we see here that we had a double bottom. Okay. How could the Peti have helped us with this trade? Now, we see here that we have a nice bar on bottom number 2 that closed in the top 25%. We don't have the 50-period simple moving average, but we're above that. So this would have told us that we have a nice edge in place. But how could the Peti have helped us? Well, if we add the color bar tool, we see here that this bar was green. This double bottom bar was green. So this was telling you and giving you even more confirmation and putting more odds in your favor that it is okay to buy Apple. And look what happened. How about TGT? Well, we were descending. We had a nice downtrend, and we made one bottom here, and we made another bottom. Now this time we closed once again. We had a close in the top 25%, but how could we have gotten more odds in our favor? By adding the Peti. And we want to see this green, giving us confirmation that it's going to go higher. So if we add the Peti, well, guess what? It's red. So the Peti is telling us this is not a good trade to take until we see a green bar. And look what happened. All right, you see how we put the odds in our favor by using the Peti and giving us confirmation either it's okay to buy this double bottom or not. So in this, you would have totally sidestepped this trade and you would have saved a lot of money. How about the Fibonacci retracements? Well, here we have the UPS. Now, this was a good trade because we were heading higher. We went down to the 50% level, but how could the Peti have helped us so that we were sure, at least, not sure, but at least we had some confidence that it was going to work out? In other words, we were not going to buy it here and then it was going to continue to go lower. Well, we add the color bar tool, and we see when we got to the 50% level, we were colored green. So this was giving you confidence that the short-term trend was up as well. So you could have purchased it roughly at this level, and it would have been a nice winning trade. As you see, the bars were green all the way up. Conversely, when we look at this Tiffany example here, we were heading lower. Here are our brackets. Here's what we would have sold right here, roughly about 84, 84 and a half. How could we have gotten confidence, though, to take this trade or to not take this trade? Well, we simply add the Peti. And we want to see a red bar here telling us that most likely the short-term trend will head lower. But as we see, right where we got to our signal, the bar turned green, telling us that the short-term trend was now up. You see how the short-term trend was lower all the way down, but once we got to this 50% retracement, we turned green. So you should not have taken this trade, and you would have saved yourself a lot of money. Let's look at this applies to strategy number 4, because this can just as easily work with our strategies as well. Remember, for buys, we're only going to trade strategy number 4 buy signals that are colored green. So here's that SNDK we looked at before. Now this trade we would have taken and it would have turned out and resulted in a loss. But this one would have turned out and resulted in a win. How would we have known in advance which one to take? This is always the great question. I always seem to take the wrong one is what I hear most of all. Most people tell me, Steve, why did I take the wrong signal? The one I took resulted in a loss, and the one I didn't take all of a sudden turned out to be a winner. It seems to happen all the time. And I'm sure this has happened to a lot of people. I know it's happened to me in the past, and it often happens, but you don't want to make it a pattern. Well, the way to not make it a pattern is by applying the Peti. Even though these meet all the requirements, closing in the top 25% above the 50 period, closing in the top 25% above the 50 period, this one did not work, and this one did. How could we have known in advance that we had some more odds in our favor? Well, we add the Peti, and we want to see that both of these are green. Once we add the color bar algorithm, we see that this one was red. So this one was telling us not to take the signal. Whereas the next signal that was generated was green, so this one we could have taken. So we would have totally bypassed this loss because the short-term trend was lower, and we could have taken this one because the short-term trend was higher. Now, if we want to sell, we're going to do the exact opposite. We're only going to trade strategy number 4 sell signals that are colored red. All right, so the upload will automatically generate those buy and sell arrows. But if we add the Peti, it'll give us a little bit more confidence. Now, these are the arrows that are generated. And as you can see here, we had a bunch of sell orders right here in ROST, but they didn't really work out very well. In fact, you probably would have been stopped out on most of them. Now, if we add the Peti, we wanted to see that all these bars below the arrows are red. Now, once we add it, we see that they were all green except for this one. This was the only one colored red. So we would have bypassed all of these signals here, these generated signals that did not work out, and only taken this one, which ultimately worked out into a nice winner. You see how simple that is? We've put the odds in our favor for taking the correct trade. FRX, this was at the beginning of February. Now we had a signal generated to go long. FRX, we didn't take it. Why? Because the Peti was colored red. So as you can see here, nothing really much happened until roughly about a week later, we had another signal generated, but this one was colored green. So we have the green light to take this trade. And look what happened. XLNX, once again, we are above the 50-period simple moving average. We have 2 signals that were generated. This one was green, and so was the next one. So you would have sat there and said, well, you know, nothing much has happened. But if you had ultimately waited, you would have seen that momentum did kick in. JP Morgan, we see here that when price is above the 50, we only generate buy signals. Now this signal was not going to be taken because it was colored red. And it went up for a little bit, but then headed lower. But the ones that were colored green did work out until ultimately we went below the 50-period simple moving average, had a signal to go short, and was colored red, and we would have taken that one. So we're putting the odds in our favor by using the Peti. We already have the odds in our favor by using the 50-period simple moving average and looking to see where price closes. But we put them even greater in our favor by using the Peti tool as well. Here's Amgen. As you can see here, we're kind of oscillating above and below the 50-period, but according to the rules of strategy number 4, as long as we close below in the bottom 25%, we can generate a valid signal to go short according to all the other rules in the strategy. Now this generated a signal to go short. Now, someone could have taken it, but had you had the Peti tool, you would have seen it's colored green. Remember, we only want to take short signals if they're colored red, so you would not have taken this trade. But about a week later, we have a signal to go long. We have the green arrow generating a buy signal. We could have gone long because it's colored green, and look what happened. Okay? We're just simply putting the odds in our favor by using the Peti. COST, Costco, as we see here, we're above the 50-period simple moving average. We have two signals that were generated. Now, most people that do not use the Peti would have taken both these signals and said, boy, this stuff doesn't work. It's not working. I got stopped out on both these trades. But if you are also using the Peti with it, you would have seen that you would have not taken any of these trades. So you would have bypassed these two losers. And then now that we're below the 50-period, now we're looking for sell signals. And there was a sell signal generated right here. This was the beginning of January. It was colored red, so this one was okay to take. And we had some nice movement to the downside, roughly about 3 or 4 points in the next week. How about Tiffany? We're above the 50-period simple moving average, so we're only looking to go long. This was at the end of last year. Here was a valid buy signal. It was colored green, so you would have made about 3 or 4 points in a week. Then we see here we have another signal generated. It's colored green, so you could have taken that, and then look what happened. Remember, even with the edge of just bars closing in the top 25%, you're giving yourself that much more consistency, okay? But coupled with the Peti, you're really putting the odds in your favor. ZTS, this was just about a month ago. We see here that we had a nice buy signal generated, but it was colored red. And even though we followed through the very next day, we wouldn't have taken this trade because it didn't meet all of our qualifications because it was colored red. So we would have bypassed that, and then a day later it would have come right back down. So it's good we didn't get in that trade. But then a couple of days later, we have a sell signal generated. It's colored in red, and it's much more profitable. Now we look at a 60-minute chart of the E-mini just to show you that this transfers over into any market, any time frame. I'm concentrating on stocks now, but it also works in the E-mini. Here's an hourly chart of the E-mini going back just past week. As you can see, we're above the 50-period simple moving this entire time. We have a buy signal generated on the 20th, which was just last Thursday, a week ago. As you can see, look what happened. Market went up. We had another signal generated here. This one did not work out that well, so it probably would have been stopped out, or if you used a larger stop, you may have still been in the trade. But we are currently in this buy signal on the hourly chart that was generated on the 25th, or Tuesday, just a few days ago. And the market's kind of been oscillating back and forth, but you would have been long roughly about 1845 or so in this particular trade. Now this was on an hourly chart. This is a daily chart, or I should say a 5-minute chart of today. All right, I took this in the first couple of hours of today. As we see here, we're above the 50-period simple moving average. We had 2 buy signals generated, and we're both green. And look what the market did right off the bat. This was in the first couple of hours of the day. 2 signals that I personally took myself. So this is how well it works. Remember, I only teach and trade. I teach and I should say instill in our members the information and the education that I personally use in my own trading. And these are 2 trades that I took today. Also, this works on daily bars in the currency pairs. Here was a nice buy signal to go along the euro-yen. This was in end of January. And even though it went up a little bit, it wasn't really that great of a signal because it was colored red. So 4 days later, it generated a sell signal, and that was much more profitable to the downside. And a current signal we have is a long signal in the Canadian dollar. We generated a couple of buy signals, and they didn't work out well, and that's fine. We didn't take them because they're colored red, but we had one generated roughly just on the 19th, I believe. So this one is currently in play for all you currency pair traders. All right, so let's recap. We shared with you two conventional methods just to show you how most of everything will work from time to time, but you still need an edge to bring up the consistency, because you still see many times that, as with my trading, when I first started trading, things will work until they stop working, and then you give everything back. So we taught you two rules that make up the very foundation of strategy number 4. We shared them with you, and that's always look to go long only if price is above the 50-period simple moving average. If price is above the 50, you will never, ever short anything. I don't care if your number one strategy generates a sell signal. Do not take the trade, because over time you will, it will be a recipe for disaster. You'll wind up giving more away than you will be winning. Why? Because you're out of sync with the trend. We want to be in sync with the overall trend, and if price is above the 50, the overall trend is up. So don't try to short. Don't stand in front of a speeding train. Conversely, if price is below, you'll never buy. You'll never bottom fish. You'll never look to buy a bottom if price is below. You'll only look for short setups, okay? And then the second rule is, if you're going long, whatever trading method you use, whether it's based on news or whether it's based off of the tides of the ocean, doesn't matter, look for the bar that closes in its top 25% of its range. Remember, just take the extreme high and the extreme low of that bar. We're not concerned with the open or the close, just the range high and the range low. Divide it by 4 equal parts, and you're looking for price to close in the top 25%. Okay, that's your clue to get in. Now, if you're going short, you should look for a bar that closes in the bottom 25%. That's your clue to get in. Why is it a clue? Because the market, not a trading room or a chat room, not some trading guru, but the market is giving you a clue that it's most likely going lower. In fact, it's pretty much screaming that it's going lower or going higher, depending on where it closes. Now, these are great, once again, edges that we have in our strategy number 4. But we enhanced it even more by adding our short-term trend identifier, which is the Peti. And we increased our edge for success even more. So now the odds are even more in our favor, and you can see we had this really nice double whammy by using those two edges, and coupled with the short-term trend identifier, the Peti, we really increased our trading odds in every market, every time frame, as I showed you. Now, in closing here, I just want to invite all of you to become members of Specialist Trading, and we have a special package that we have a combo. We're not only providing you with strategy 4 and all the rules and all the instant access, but we're also throwing in the Peti, which we showed you, the color bar algorithm, so you can really increase your odds for success. This is a 2-for-1 attendee special. Now, I just want to show you how well it works in current conditions. Okay, here's a news event that happened just roughly a week or so ago on the 18th. USA Today reported Tesla shares hit new high as Apple rumors swirled. I'm sure you heard of this. The shares of Tesla Motors hit new high Tuesday as investors continued to react to news that the electric car maker's CEO met with Apple's acquisition chief. So this is great news, and people that like to trade off news probably would have taken this as a buy signal. Okay, it can't be bad for the company. Obviously, it's good. And this is, as you see right here, on the 18th when the news came out. All right, even though we went down the next day, price continued to soar as they took this snapshot just a day or so ago. Now, let's go back to the edges we taught you. Where is price in relation to the 50-period simple moving average? Price is above, so we're only looking to go long anyway. So anyone trying to short Tesla would have been, handed the market back to them, because there's no way you should ever short anything if it's above the 50. So that's good. Then we want to look for bars that close in the top 25% of their range. Now, if you had strategy number 4, if you were a member of strategy number 4, you would have seen that about a month ago, we had already generated signals to go long before this news even came out. Remember, we're not concerned with outside sources such as chat rooms or news events. We're more concerned with what the market is telling us. And everything you need to know is right in front of you, and the chart in front of you. We don't concern ourselves with news or with volume or with someone guru is saying. We only concern ourselves with what the market is saying. And on the 14th of January, Tesla was telling us to go long, according to strategy number 4. And the bar was colored green as well with the Peti. Then again, it gave you a second chance to go long on the 28th of January, nearly a full month before this news came out, because another strategy number 4 signal was generated. So do you see how powerful this combo is? I know this is expensive stock, but there are some option traders out there that could have used this to purchase an option. Even though we don't have option classes per se and option courses, you could have simply gone long a call option on both of these, all right, and had a really nice profitable trades here. So we just want to show you that we don't concern ourselves with news events. Oftentimes, news is after the fact. Oftentimes, you'll see our strategies have us long before a news event, a positive news event comes out, and it'll have you short before a negative news event comes out. Why? Because the market is giving us clues in advance, and this is what we teach you in all of our courses. Another thing that's great about the Peti that I just want to share with you really quickly is that you can use it for long term. Okay, here's a monthly chart of the S&P index going all the way back to 1995, nearly 20 years. Okay, now as we see here, the market went straight up all the way up until 2000, and then we had the bubble, and we fell out of bed until 2002. Then we went straight up until the banking and housing crisis, and once again fell straight out of bed. And ever since that, since roughly 2009-10, we've been going straight up again. For those of you who would like to time your portfolio, your IRAs or your long-term investments, wouldn't you like to have known in advance, or at least have an idea when this trend was going to change rather than just buying and holding the entire time? Well, if you would have simply added the Peti to this long-term chart, guess what? You see how the majority of bars were green all this way up until the majority bars turned red. You had roughly a confluence of red bars here. You could have gotten out and stayed on the sidelines until you roughly had 3 to 5 green bars. And then you could have gotten that back in, gotten out roughly in before 2008, the end of 2007, and sidestepped all of this, and then got back in roughly mid-2009. And as you can see here, continue to ride it all the way up. So this is such a great tool, the Peti. I use this every day in my trading to help me get on the right side of the market for the short term, coupled with the 50-period simple moving average and strategy number 4. And so it's a great, great tool. We're throwing this in as a combo. Now, if you purchase these separately, even with the great discounts we'd have, it roughly costs about $2,000. We're discounting this for all the members today down to $14.95. I can just tell you, in my opinion, I really feel it will pay for itself very, very shortly with that short discounted price. Once again, I use this each and every day, and I know a lot of people will say, well, Steve, I've had trouble trading. I don't have that large of an account. That's even for me, that's a pretty large cost there. We still have available payment plans, so you can call up our trading consultants, and we will work with you on some type of trading plan to meet your needs so that you don't have to come up with a full price. Remember, we're throwing in 2 great techniques for the price of 1. You get instant course access, detailed instructions. I'm going to share with you all of our entries, our exits, and our stops. I couldn't give that away, that information today, because it wouldn't be fair for the people who have already spent over $2,000 just for strategy number 4 rules as it is. So I just gave you those 2 great edges. But once you become a member of strategy number 4, we'll tell you exactly where to enter, give you different entry spots, different exit points, if you'd like to stay in the trade longer, or if you'd like to get in and out quickly, and we'll tell you different stop placements as well. We also provide you with those signal alerts. On a daily basis, we will email you different signals for the different markets. As well, we have weekly trading video archives, different tips and techniques to enhance your trading. And remember, this includes both of the add-ons, so you can add these on to your charting software, so that you'll automatically see the green and red arrows for strategy number 4. As well, you can also add on the Peti tool. So this is great, great 2 things for the price of 1. And lastly, you have access to my personal email address. You can email anytime you'd like, and I'll contact you and get back to you just as soon as possible. All these things discounted down from roughly $2,000 down to $14.95, but only for a limited time. Okay, we usually sell these separately, and once again, even at the great discounts we've had in the past, it would cost you over $2,000. But at this price, $14.95, this is a great, great deal. And as I stated, we will work with you if you can't come up with the $14.95 altogether. Now, before we go into question and answer period, if you have any more questions or would like to see more about the strategies or methods we have, you can go to our sister site, which is Pro Trader Strategies. They market and produce the uploads and the software for all of our trading strategies. That's protraderstrategies.com. You can get more information about myself and the strategies, or you can contact any one of our trading consultants at trading@protraderstrategies.com, or call us directly at 310 888-598-6677. They will work with you on the discount. They will work with you with payment plans, and they can have it as early out to you if you decide to become a member today. It'll be there this evening, so you can have everything in the next hour or so, and you can be studying the course as well. Okay, so this brings us to the end, and I want to open up the question and answer box. Once again, I know a lot of you are asking, is this recorded so I can kind of research it again? Sure, it's recorded. You can simply call up that number, or you can email one of our trading consultants, and they'll get back to send you the link. But please remember that the discount is only for a few days. It's a limited time only. So if you want to take advantage of that, you'll have to watch this again, but make a decision very quickly. All right, so let's see here. Let me go back and look at some questions. I'll try to take them. Let's see. Do you use candlestick charts? Yes, some of the strategies we have. In fact, one of the strategies we have for the Forex markets is a candlestick chart only type. But it doesn't matter regardless of what you're using. Most of our strategies or methods can be used with candlesticks or without. They're not relying on candlesticks. So it's up to you which charts you want to be using. Carlos asks, can you go to real life market of the British pound yen? I'm sorry, Carlos, this is not a dynamic, this is a static chart. This is a PowerPoint presentation, so I don't have the ability to do that. But if you contact maybe one of our representatives, we can answer any question you may have, okay? What performance does the Peti work on, please? Well, what platforms? I'm sorry. I think they may have answered your question there, Rob. It works. The Peti is available for NinjaTrader, TradeStation, Metastock, and MT4. So it works perfectly on all those platforms. Okay. So those are the four main ones, and you can apply those to each and every one. Okay. Let me see here. Are the arrows generated by a program or placed on the chart manually? The arrows are generated, once again, by the upload. So we provide that with you, as well as the Peti. So you automatically just upload it onto your computer software, if it's NinjaTrader, TradeStation, Metastock, or MT4, and you will automatically see these arrows or dots where you should be purchasing or you should be selling. In other words, where a signal is generated. Now, at the same time, you also upload the Peti, and the colors will turn red or green. And this works with candlesticks as well. So you can see them even with candlesticks, and you'll see the difference whether it should be red or green. So it worked great. How often does your Peti differ from the color of the same time frame candle? There's no statistics on the Peti. We don't really look at it that way, and it's not. It depends really on the time frame. If you have if you're looking at, let's say, 50 tick charts, you're going to see a lot of bouncing back and forth because there's a lot of noise on intraday trading. But if you're looking at something like a 5-minute chart, which I showed you just a few minutes ago, and that was a chart of today's performance, you'll see that it fairly stays in uniform. You'll have anywhere from 5 or 10 bars to maybe 50 or 60 bars, all of the same color. It all depends on how the algorithm is coming up with its calculation to tell you whether it's a short-term or a long-term type of trend in place. So it's a very simple tool. It's just proprietary. We don't want to give away the rules, but it's extremely simple. But we do give away all the rules for strategy number 4. Okay, so I just don't want to tell you that you're not going to know why a signal was generated in strategy 4. We tell you each and every rule and tell you the process behind the strategy. Muniraj is asking, what is the best time frame to trade? Well, I'm always asked this. And the best time frame to trade is the one that you feel the most comfortable with. And I'm not saying that facetiously, but we have a lot of people that cannot trade intraday. They don't feel comfortable, and so their best time frame is a daily bar or a 4-hour chart, let's say. And we have other people that do not want to trade that long of a time period. They want to trade only 5 periods. So a 5-minute chart is their best time period. So once again, we work with you on finding the best time frame that you feel comfortable with. Okay, that's what we do as a mentor and as a student of mine. I will work with you on that so that you can really feel comfortable. I'll ask you some questions and see what type of a trader you are. So the best time frame is the one you feel the most comfortable with. I guarantee that's why we don't believe in trading rooms or chat rooms. We don't have them here because most of the time people will try to copy what the person in the trading room is telling them to do. And that's not going to work. It's more of a crutch, in my opinion. You have to find your own way, your own niche. If you're an intraday trader or a daily trader or a combination of both, and then stick with that. But if you try to mimic what someone else is doing, I can almost guarantee you're going to go down a road of disaster because you're not going to make any money because you won't feel comfortable. So we want to find the correct time frame for you. So there's no one correct answer. Okay, my favorite time frame is probably different from someone else's favorite time frame. So there is no one correct answer. Okay, I hope that answers your question. Maverick asked, do you use level 3 book viewer or level 2 in your strategies? No. Once again, as I stated in the very beginning of our presentation, this only serves to complicate your trading and once again has you rely on an outside source looking for volume or what's going on in the different level where the bid and asks are. It's too complicated. We don't need to overcomplicate our trading. I used to look at this stuff all the time on the floor, stuff that was similar to it years ago, and I couldn't make a dime. And once again, my mentors taught me that, Steve, the reason why you're not doing well is because you're overcomplicating your trading. And once they told me what to discard and what to focus on, I really simplified my trading and I started to have that consistency. I'm not telling you that I started to make $1 million the first week, but I started to get consistent. So that's what we teach in our courses. Remember, we're an educational company. We're not here trying to have you mimic all the signals that are generated. We want to have you pick and choose the signals you want to take that best meet your needs, okay? And we also want to keep things as simple as possible. And so that's why we don't take those into considerations. What Bollinger Band deviation works best for short-term trend? Well, you know, Ronald, that's a different question. We're not concerned with the Bollinger Bands right now. That's a different, has to do with another one of our strategies. That's strategy number 3, which is a great strategy in and of itself. But if you want more information, I would suggest contacting one of our trading consultants because we're only talking about strategy number 4 in the Peti today, okay? 4 range always closes as the top or bottom quarter of the next bar open. Okay, when you're talking about the range, we're looking at, in other words, the signal. In other words, whatever strategy you use, when all the rules have been met, when everything has come together, either it's a news event and that gives you the signal to go long, or let's say perhaps it's, once again, I wasn't being facetious, let's say it's based off astrology. Whenever anything comes together and that's telling you I have a valid buy signal or a valid sell signal, that bar, if it's a buy signal, should close in its top 25%, okay? If it's a valid sell signal, regardless of what it's based off of, it could be based off the tides of the ocean or it could be based off strategy number 4, that signal on that bar, when the signal is generated, should be closing in its bottom 25%, okay? So I hope that's answering your question. Once you have a signal that is valid, you should look for these things in the bar, all right? Okay, I see you're welcome. As some people may be coming up with more questions to answer, remember, this is a great, great discounted price. If you purchase these separately, it would cost you roughly over $2,000. We discounted it down to $19.95, but we've discounted it even more for the attendees today, down to $14.95. But that's only for a couple of days. You saw how well it works with Fibonacci retracement. You saw how well it works with double tops and double bottoms, and you saw how well it works with using strategy number 4. So we're creating this great combo of giving you 2 for the price of 1, strategy number 4 along with the Peti, okay? You're really going to increase your odds for success. Strategy number 4 already has tremendous consistency. Remember, it's already traded by people in over 60 countries around the world. We're increasing the odds for even better trades by throwing in the Peti. So this is a great, great combination to increase your odds for success. And if you're having trouble in 2014, if you're not where you want it to be starting at the beginning of the year, I really urge you to take advantage of this discount. Remember, we will work with you on pricing and the payment plan option. So you can contact us, as you see the number provided in the chat box there, and we'll work with you in any type of pricing to help you so that you can get this really great discount, okay? All right, if there are no further questions, that will end our presentation. I want to thank you so much for attending today. Remember, if you have any questions, just email us at trading@protraderstrategies.com or call us directly at 310-598-6677. Thank you once again. I look forward to all of you purchasing the Peti as well as the strategy number 4 so that you become members of Specialist Trading, and I can hopefully have you as a student and mentor you along the way. Thank you so much for attending. I wish you the best of luck trading, and we'll see you next time. Bye-bye.
The organizer has ended the session and this call will be disconnected.